Hi, this is Matthew Cratter from Trader University. And today I want to teach you how to sell covered calls on a stock. And the example we're going to be using is Intel, whose ticker is INTC. So the way we start, we're just going to go to Yahoo Finance and we're going to go down to this box and type in INTC. And we see here, let me show you exactly why I picked this stock to sell covered calls on. I picked this stock because it's reasonably valued. It has a PE ratio of 16, which is fairly close to historical market averages. And another way of checking is it has a dividend yield of about 3%. You can see here. So that's always a good check. The last thing we wanted to check is to make sure that the company doesn't have too much debt. So to do that, we will first go to statistics, and we'll scroll down. And you can see here that the current long-term debt, it has about $25 billion in debt and $17 billion in cash. So it's got about $8 billion in net debt once you subtract out the cash. And this becomes even more clear when we look at the when we look at the income statement. This company makes about, if we scroll down here to the bottom and look at the net income, it makes about $11 billion a year. So they could pay off all their debt in just 2 years. So that makes this a fairly safe pick, I think. So now we've decided we want to sell covered calls on Intel. So what do? We go to CBOE. You can type in cboe.com and then you just enter the ticker. And I like to sell my calls about 2 months out. So right now it's mid-April 2017. And I'm going to be selling the calls about 60 days out. So we'll say June. And I've picked, the stock is currently trading at 35.36. So we'll look at the next strike up, which is 35.50. And you can see right now it's bid at 78 cents, offered at 0.88. Now when you sell covered calls, you're going to be selling to the bid. So we're going to sell, what we're going to do basically is we're going to buy 100 shares of Intel. And you can size this, you can adjust the sizing for your account size, but I'm going to do a very small trade here. We buy 100 shares of Intel at $35.35, so that costs roughly $3,500. And then we sell one call against it. And we're going to choose the expiration is going to be June 2nd, 2017. The strike price is $35.50, so it's the strike price that's right above where Intel's trading right now. And we will sell them for 78 cents a piece. So basically let's calculate our potential return. It's going to be 0.78 divided by, what did we say Intel was trading at? It's trading at, call it 35.36. So 0.78 divided by 35.36. And we get about 2.2%. Now this is just for a 2-month holding period. So if we did this every 2 months for an entire 12 months, that would turn out to be a little more than 12% a year on our money in this fairly low risk strategy. But it actually gets better than that, because what we forgot to take into account is the fact that Intel, because it is a dividend stock, a good blue chip stock, it will be paying us a dividend between now and this June expiration. So if we go to Morningstar, we see that the ex-dividend date is May 3rd, 2017. So basically, if you're holding the stock the day before this on May 2nd, which we presumably will be, you'll make another 27 cents, 27.25. So if we add that into the total return, we're making 78 cents from selling the option, plus, what did we say, 27.2725. So the total return then comes to 2.97. So call it 3% over a 2-month period, which if we do that every 2 months, we'd basically make 3% times 6, because we do it every 2 months, and there are 6 2-month periods in a year. So that would take us up to 18% a year for this fairly low risk strategy. So that's my number one pick right now for selling covered calls, Intel, and doing the June calls. Now, if some of this didn't make sense, I recommend you take a look at my best-selling Amazon book, Covered Calls Made Easy. And in this book, I go into all the terminology, what a strike price is, expiration, how to size, how to pick good candidates for covered calls. and it's just $2.99. It'll teach you everything you need to know about covered calls. While you're at it, make sure you subscribe to my channel. I'll be putting out more of these covered call videos going forward. And please leave me a note in the comments and let me know if this video was helpful and what else you'd like to learn. Thanks for listening.